start with the market action. Weakness across Asia and Europe rubbed off on the Lal Street today, where shares largely came under pressure. But there was a recovery that we saw after a sharp fall on the opening bell. Finally, the Sensex and the Nifty lost nearly 0.5% at close. All sectoral indices ended in the red, barring the Nifty IT index. In fact, staying with market-related news, net inflows into equity mutual funds have more than doubled in September compared with August, with more than 14,000 crore rupees in inflows. The net equity inflows has been the highest in the last 3 months. SIP inflows have also remained steady at nearly 13,000 crore rupees. In the currency market, the rupee remains under pressure with the dollar strengthening on the back of higher crude oil prices. The Indian currency opened at a historic low of 82.62 against the dollar. It recovered some of those losses, finally closing flat at 82.32. Lata joins us now with the key factors that are moving the money market. Lata, a recovery closing at 82.32, but the pressure continues for the rupee.
Well, the rupee had to start lower because it was a triple whammy day. Crude prices higher, dollar stronger, and US yields much higher than what it was when we went to bed on Friday. So the NDF market, which is the rupee trading overseas, the non-deliverable forwards, that overseas market had indicated an 82.82 start for the rupee in morning trades. Now, when it is an NDF market, the Reserve Bank looks at it possibly as speculative positions, a mix of shorting of the rupee that, FX reserves are falling. After all, on Friday, we got that FX number, which was just 532 billion compared to a high of 640 billion a year ago, and plus crude oil. All these are sentimental rupee negatives. So, and it is in the NDF market, which is, as they see, a more speculative market. So they came in heavily in early morning trade. The rupee did touch 82.62, but there was a lot of PSU banks selling dollars, which is market lingo for RBI intervention. Dealers say that left to itself, the rupee will still go towards the 83 mark. But today, the US and the Japanese markets are closed for separate reasons, and therefore, for the moment, perhaps the Reserve Bank will be able to stem the volatility. But the direction is very clear that there is perhaps more fall to come for the rupee, especially because, the mix is bad for us. Exports to do badly because globally there is recession, but recession is not pulling crude prices down. It's a bad combo for the currency, at least in the near term. A word on the bond markets there as well. The yields have gone up, but it's not as bad as we thought. The US yields are so much higher. So the expectation was it will cross 7.5. It's kind of held on simply because the Friday auction of Government of India paper, especially the 10-year, went smooth, a little better than expected. So at the moment, it's not terrible, but the near-term look is that it's going to be 7.62, which is the high the yields touched in June. So that is very much on the market's radar.
Lata, many thanks for joining us. That's the rupee for you. Now, brokerage firm Nomura has downgraded India's FY24 GDP forecast to 5.2%. However, its growth expectation for FY23 is in line with the RBI's revised forecast of 7%. Nomura says India's optimism for FY24 may be, and I quote, misplaced, and the spillover effects from the global slowdown are being underestimated. Now, shares of Tata Motors under pressure today. This after its subsidiary Jaguar Land Rover reported a 5% drop in sales in Q2. The drop is largely being attributed to the semiconductor shortage and the macroeconomic situation on account of COVID lockdowns that continue in China. But there are some green shoots for Motown, at least in the domestic market. Auto dealers say strong sales have been seen in the festive season. According to the Federation of Auto Dealers Association, sales during Navratri rose by 57% versus 2021 and were up 16% versus the 2019 levels. Almost all categories have shown strong growth, including two-wheelers. Shares of India Bulls Housing Finance dropping in trade after the Enforcement Directorate moved the Supreme Court against the company. The ED has challenged the Delhi High Court's order, which had quashed a probe against the company over alleged money laundering. The Enforcement Directorate is seeking to set Delhi High Court's order aside to continue with its probe. The Supreme Court has deferred the hearing to the second week of November. And sticking with the court corner, the Delhi High Court has ordered global personal care brand L'Oreal to pay a sum of 186 crore rupees for not passing on GST rate cuts to consumers. Timsy standing by with the details. Timsy, take us through what the court has said.
Well, in a major setback for L'Oreal India Private Limited, the Delhi High Court has asked L'Oreal India Private Limited to pay up 186.39 crore rupees of GST profiteered amount, and L'Oreal has been asked to pay this up in 6 equal installments, which needs to be submitted under the Consumer Welfare Fund. Remember, Delhi High Court had reserved the order in this matter on 2nd September, and it finally pronounced the order on 6th of October, for which a final copy was released just a few hours back. And what is the case? Well, DGAP, that is the Directorate General for Anti-Profiteering, had done a detailed investigation and had found that L'Oreal India Private Limited was not passing on benefits of reduced GST rates cut down from 28% to 18% with effect from November 15, 2017 on products such as face wash, shampoo, hair color, conditioner, makeup products, etc., post which a detailed investigation report was filed by DGAP to the National Anti-Profiteering Authority. The authority heard the parties, and it, in its final order in June this year, had said that L'Oreal India had profiteered about 186.39 crore rupees. The amount was profiteered between November 15, 2017 till December 31st, 2018. That was the period of investigation. So let's see how soon L'Oreal now pays up this amount in 6 equal installments under the Consumer Welfare Fund. Back to you.
Timsy, many thanks for joining us. Now, shares of online travel company Easy Trip Planner surged in early trade after the company announced a stock split in the ratio of 1:2. The company also announced bonus of 3 shares for every 1 share held. Here's the big story. The number of children's deaths linked to allegedly contaminated cough syrups made by India's Maiden Pharma has now risen to 69. Meanwhile, a report by The Wire says that the World Health Organization, in a statement to The Wire, said that it did not certify Maiden Pharma's plant as claimed on the company's website. The pharma exporter's body has suspended the company. Abhimanyu Sharma reports from Maiden Pharma's offices in Delhi, which wear a deserted look.
This is the Delhi office of the pharma company Maiden Pharmaceuticals, which has come under scanner after 66 children died in Gambia after consuming cough syrups which were produced by the company. While the company has expressed shock over the incident, it has claimed that it has been working since the past 3 decades as per the protocols laid down by the Central and Haryana state regulator and is cooperating with all the relevant authorities. The pharma exporters body, Pharmexil, has also suspended Maiden Pharmaceuticals, which has been warned of illegal practices by the state governments of Gujarat and Kerala in the past, as its medicines had failed to meet the standard quality tests. When we visited Maiden Pharmaceuticals' office in Delhi, the company officials said that no one from the senior management was present, and they pointed to the notices which were pasted outside their office. One was a medical product alert against substandard pediatric medicines by the WHO, while the second was an order by the Medicines Control Agency in Gambia to suspend and recall all products of Maiden Pharmaceuticals. While the company's website had claimed that one of its plants was certified by the World Health Organization, WHO had told The Wire that it had not certified or inspected any of the plants of Maiden Pharmaceuticals.
Our colleague Abhimanyu Sharma there reporting from outside Maiden Pharma's office in Delhi. Now, Maiden Pharma has a controversial track record. Reports quoting the World Health Organization indicate that the UN agency had never certified Maiden Pharma's plant. Maiden Pharma was one of the 46 Indian companies blacklisted by Vietnam in 2013. Ekta Batra has more on the repeat offences.
As per a report by The Wire, the World Health Organization has said it never certified Maiden Pharma's plants. Also, the report indicates that the contaminants of the drug by Maiden Pharma was so poisonous as per the WHO that it resulted in an 85% fatality rate. And most of the children who were impacted by the 4 cough and cold syrups produced by Maiden Pharma and exported to Gambia were below 2 years of age. This issue continues to raise concerns and questions. For example, while the company did not have a license to sell these 4 cough and cold drugs in India, were there enough red flags to have averted this incident? For example, the company, which started operations as per its website in 1990, was one of the 46 Indian companies blacklisted by Vietnam in 2013. The company had 6 of its drugs such as diabetes medicine metformin, vitamin D and calcium tablets, and blood thinner aspirin that have been reported as substandard since since 2015 by drug regulators from Kerala and Gujarat. Many of these cases of substandard drugs were reported in the past few months. So how did their lax manufacturing go unnoticed by authorities? Legal experts point to a couple of issues. One is of too many regulators. While any new drug in the country gets approved by the central authority, the Drug Controller General of India or the DCGI, the older drugs, which are anything more than 4 years, are governed by state regulators. Also, a regulator of one state cannot inspect the facility of a pharma company in another state unless the regulator of that state is on board. And many states have different licensing procedures and approval processes. Hence, there is a lack of central coordination or authority which can take a collective call on substandard production, with companies then getting away with lax processes. Experts point out that for India, there is an urgent need to have a common regulatory authority, possibly on the same lines as the US drug regulator. One needs to at least centralize the licensing process for manufacturing facilities and have transparent processes as well. And while creating a centralized authority might come with its own challenges, lastly, the industry watchers, experts say it is time to bridge the gap when it comes to India's pharma industry. While on one hand, we are exporting over $20 billion of pharma drugs globally, with the largest geography of US FDA-compliant plants outside of the US, on the other hand, we have seen 5 cases of DEG poisoning alone, with the latest case in India just 2 years ago in 2020.
Ekta, many thanks for joining us. Those are some of the loopholes that need to be addressed, and this is once again being highlighted by the Maiden Pharma case. Time for us to head into a short break, but up next, Russian missiles strike Ukraine's capital city, Kyiv, for the first time in 7 months. That and more when we return.